Imagine waking up one morning in early 2026, grabbing your phone and seeing your Kaspa balance flash up in bold numbers. You tap in and suddenly realize that those 5,500 KAS you scooped at just over a dime apiece have turned into something you barely dared to dream. Before we dive into how that might happen, if you want to trade crypto, I trade on WEEX. It's a reliable exchange with deep liquidity, low fees, and a massive selection of coins. You can claim up to $30,000 in sign-up bonuses and trade with up to 400x leverage. Sign up now with the link in the description, deposit, start trading, and claim your bonus. No KYC required. If you've ever wondered, what could 5,500 Kaspa tokens be worth by the end of 2026? You're in the right place. Today, we're breaking down Kaspa's unique technology, recent network upgrades, real-world use cases, on-chain metrics, and market forecasts. By the end, you'll see three clear price paths: cautious, realistic, and bullish, so you can decide where you stand on Kaspa's potential runway. Kaspa trades at approximately $0.105 per token, putting your 5,500 KAS at about $578. In a sector where coins race to capture headlines, Kaspa stands out thanks to its block DAG architecture and proof-of-work security model. It processes blocks in parallel, delivering finality in under 10 seconds and hundreds of transactions per second. No orphaned blocks, no bottlenecks. Let's unpack the technology first. Traditional blockchains force all mined blocks into a single chain and discard the rest. But Kaspa's Ghost DAG protocol lets parallel blocks coexist and orders them into a secure consensus. That approach boosts throughput and security without sacrificing decentralization. Meanwhile, its hash rate has climbed above 900 petahashes per second, higher than many legacy networks, making any 51% attack economically insane. In early 2025, a major protocol upgrade blended Byzantine fault tolerance with Nakamoto consensus. This hybrid enhancement solidified security while keeping Kaspa's lightning-fast, low-fee transactions intact. Around the same time, the community launched a staking initiative on major exchanges, allowing KAS holders to lock tokens for rewards. That mirrors transaction fee consumption, stabilizing costs, and incentivizing long-term holding. Developer tools have also matured. New SDKs for JavaScript and Python let coders build smart contracts and custom transaction logic more easily. Enhanced explorers now track miner distribution, confirmation patterns, and transaction graphs in real time, vital for institutional confidence. Community-built dApps showcase everything from decentralized exchanges to streaming micropayments for content creators, hinting at Kaspa's broader Web3 potential. But technology is only part of the story. Real-world integrations have begun to emerge. Last quarter, a luxury automotive marketplace enabled car purchases with Kaspa, proving that high-value goods can flow through a blazing-fast POW network. A Southeast Asian remittance pilot slashed costs by up to 40% compared to traditional money transfer services, thanks to sub-cent fees and near-instant settlement. Supply chain consortia are exploring block DAG finality to track products end-to-end from factory floor to retail shelf. On-chain metrics back this up. Daily transactions have more than doubled in 6 months, surging from a few 100,000 to over 1 million. Active addresses outpace dormant ones by nearly 2 to 1. GitHub activity has spiked, and hackathons and meetups now draw bigger crowds. All of these signals point to growing network utility and growing demand for KAS. Turning to supply, Kaspa has a maximum of 28.7 billion tokens, with just over 26 billion in circulation today. Its issuance schedule gradually tapers block rewards rather than halving abruptly, giving miners steady incentives while slowing inflation. That predictable supply helps model future scarcity as demand from remittances, DeFi, NFTs, and enterprise pilots ramps up. The broader market environment is also shifting in Kaspa's favor. Proof of work is gaining renewed respect as regulators in major regions clarify energy use standards. Kaspa's efficient ASIC mining setup contrasts favorably with older, less eco-friendly chains. Meanwhile, global crypto adoption trends show that platforms combining decentralization, performance, and real-world utility often lead the next wave of investment. So what do the forecasts say? Data-driven models that factor in volume trends, market cycles, and comparable assets put Kaspa in a wide price range. In a cautious outlook, KAS could trade near 15 cents by late 2026, a 43% gain over today. That would value your 5,500 tokens at around $825, a solid return for a low-risk crypto play. In a realistic growth scenario, imagine staking locks up significant supply, enterprise pilots multiply, and developer tools drive new dApps. KAS could reach 30 cents, putting your stash at $1,650, nearly triple your starting position. Those gains align with mid-cycle altcoin bull runs driven by genuine use cases plus momentum. And in a full-blown bullish case, think high-profile partnerships, DeFi adapters live on BlockDAG, mass remittance adoption, and a broader crypto rally, Kaspa could break above 60 cents, even 80 cents. That would value your 5,500 KAS at $3,300 to $4,400, an eye-watering 570 to 660% return. Of course, such upside comes with risks. Protocol upgrades must deliver as promised, and developer engagement needs to continue. Competing DAG or roll-up projects might lure builders away. Regulatory shifts could impose compliance costs on POW miners. A macro downturn or security incident could send prices back toward the mid-2-cent territory we saw earlier this year. Still, Kaspa's resilience so far is encouraging. After a high above 20 cents in late 2024, it fell near 6 cents by early 2025 before rebounding on enterprise news. That bounce shows that solid adoption stories, not just hype, fuel long-term value. With next year's planned fork set to unlock smart contracts and subnetworks, expect even more real-world activity to drive demand. So, what does this all mean for you? If you're playing it safe, targeting that conservative $825 outcome offers a dependable return. If you want significant upside but prefer a balanced approach, the realistic $1,650 mark is well within reach. And if you believe in Kaspa's BlockDAG revolution and broader bull markets, aiming for $3,300 to $4,400 could turn your modest $400 stake into a four-figure payday if you can stomach the volatility. Now it's your turn. In the comments, let me know which scenario speaks to you. Are you aiming for that conservative bump, the realistic triple, or the bullish 500% run? Which catalysts, network upgrades, enterprise deals, or market cycles do you think will matter most? If you found value in this deep dive, hit like, subscribe for more crypto analysis, and ring the bell so you never miss our next forecast. Here's to making smart moves in the world of Kaspa. See you in the next one.